Welcome back, folks. Good afternoon. Hello today. Had a pretty busy day today. Wanted to just sit here and trade the day away, so woke up early, did my thing, stayed out of the Discord, made sure I was focused. A lot on the line, of course, in terms of how this inflation trade is going to work. The market kind of had the exact reaction that I had, right? Where we talk about yesterday, that low coming in yesterday, my continued confidence to buy through the value side and to even continue to buy on the mega cap side. Now, mega caps, we'll take a look after. Mega caps I bought the day before and was able to hold those. But again, buying yesterday in the midst of a lot of inflation. We get the inflation numbers. CPI's come out. It's a big shock. That's what I expected. And Chris had asked the question in the channel, and I answered a little bit. Obviously, we've had a lot of rotations happening, and of course, there's still some rotation going on. But I think when we just if we just take a macro look for a moment to put all the pieces together here, because I think sometimes we forget a little bit of everything. Uh, think of the overall market right now and what we've done through this area at the beginning of the year. We had a lot of inflation talk, and this is when yields started to rise, right? And when yields started to rise, we started to have worries on the growth side because rising yields and inflation can cause yields to go up, and if yields go up, this is going to cause a discount of growth for the growth companies. And so what happened? Well, we started having a lot of selling through growth, right? And during this moment, we had a lot more buying going to value. That was rotation. You're selling growth to go into value. And then from this March 25th date, when we started to go long on growth again, also at the same time, value was continuing to go up as well, right? This was where this consolidation here was where a lot of the rotation was. Now, we continued to go bid, didn't get affected by yields or anything. We still accepted that inflation that's the baseline. We're going to have inflation. Things are going to appreciate. Through this last 2 weeks or so, right, leading into the actual numbers, we've had hedging. We've had those that don't believe that inflation actually leads to higher equity prices selling. And we've seen a continued rotation from those that say, okay, it may not be good for growth, but it'll actually be good for value, which is why they continue to buy through the value side, right? Which is why the Dow and the Nasdaq look completely opposite to each other. Now, what's happened the last few days here? We've had selling just across the board, right? We've had just volatility across the board. And when the numbers came out, we continued to sell from there. The question here is just, again, is inflation going to negatively hurt equities? You can have varied opinions, but historically, if you look, equities do very well with inflation. They actually do well with inflation, with prices increasing. And this is linked to an economy rebounding. This is linked to a time in which we have more federal support than ever, more fiscal spending than ever. And so, again, when you put the pieces together, a lot of these should lead to higher prices, which is why the market just on Friday was trading at all-time high on the S&P, and the Dow was trading at all-time highs here on Monday, right? That was just 3 days ago. 3 days ago, we were at all-time high. What changed? Nothing changed other than the numbers came out, right? And so if you put all of that months of trading that we had before, this is where from yesterday, it can be aggravating for some people if the first time you bought was just at the all-time high. If the first time you bought was over here, let's say like May 7th, May 10th here, the beginning of this week, that was the first time you bought, then yeah, this week was pretty frustrating for you. But if this wasn't the first time you bought, right, and you've been trading like the rest of us through this area, this is where, when you hear me go yesterday, it can definitely be probably aggravating that I'm going, oh, okay, I got stopped out again. I'm going to make sure this time when I buy it, I'm going to hold it because it's going down, and that's a good thing, right? And you can be like, well, aren't you just being very biased right now and continuing to buy when actually it's pretty weak right now, right? Those are very different things, and I'm gonna use an example here because I want to make sure we're clear here that again, I trade long, short, it doesn't matter to me, and I'm just trading off a price. And when we have macro reasons to go long, we trade through long. Again, trading through the long term, you can actually take volatility as a chance to get long exposure. So when there's actually increased volatility, buying here in the long term is actually a better price than buying through the short term. Again, that's an options discussion, but we all know that we buy the volatility now to trade it to higher volatility in the future, right? It's a very big difference buying long term here. So that's something to think about a bit. But I want to use the Bitcoin example here because I just want to make sure we're clear. Because again, I can see how some of it can look like things are very biased. Okay, last year I put 10% of my portfolio. It obviously, when I sold it, was a lot more than 10% of my portfolio. But I put 10% of my portfolio in back here in the summer. My average was about 9,200. Okay. I said, Bitcoin's going to 100,000. I'm never selling it until it gets to 100,000. I was adamant. Every time we had a pullback, 30%, minus 30%. I'm like, nope, I'm holding it. There's nothing wrong with it. I'm going to keep holding it and pushing it to 100,000. I'm going to make that money, right? Now, mind you, I'm up like 600% over here now, right? I changed my mind. And I want to make sure we look at this scenario as well because, again, it could happen again where we need to do this with the equity market. It's, again, today I think vindicated a lot of those ideas. But over here, when we started, if you remember in my talk over here of why I sold around the 55,000 area, was because we started to get a bunch of sort of these socialites and Elon, the Kathy coming out. What were they saying? Right? So we had selling on Bitcoin, but then what were they saying? They were saying, oh no, Bitcoin's good for the environment. And we were getting a lot of these very strange things coming out, right? When a lot of selling was happening, it was specifically when this candle was coming in and we had a lot of selling, that all of those people, personalities, started to come out and say a lot of, strange things to me, what I thought were very strange. And so these things are happening. I start to get a little worried going over that weekend, and I made the decision to take profit on all of it. I took all of it when we were at basically the peak of most attention to things that are just, now we can look back on. I'm going to fill the point out here. So I'm like, okay, why are all these things happening? So I sell, and then in a few hours we get news that there's going to be higher taxes. Crypto is going to be talked about in terms of, it's not regulation as much as we're going to just tax in such a way. And so then we continue to sell, right? And mind you, this is when we're talking about Bitcoin's good for the environment. Okay, what happened over here? Well, now we have Elon admitting that, okay, Bitcoin's not good for the environment. Well, obviously, and that's why over here I'm like, well, obviously, everyone knows that. And now you start to put the pieces together over here, right? That's a changing of bias because all of a sudden, it's no longer what I think. I think Bitcoin's good, and I think the idea of blockchains and everything is a very good idea, and I believed in the stack to flow model. But it's not so much a model or economic theory at the end of the day, as much as it is of a market and sort of the world view and opinion on something, right? And so that's where I can change my mind. And I say, you know what? This is no longer what I bought it for. And we're doing there's something very different here, right? And so over here, again, now it's been, now look how silly it is, right? To be like, okay, well, yeah. Now Bitcoin's probably going to be fine, right? It's probably going to be fine, but guess what? It's not continuing to go up to 100,000 right now, is it? So that money I took profit over here, I'm pretty happy about, right? That I changed my mind and that I wasn't stubborn and said, no. It's going to go to 100,000. No big deal, right? I'm pretty happy not holding through this shit here, right? Now, let's go over to here because this is important. Through this entire time, I've been extremely bullish and nonstop sort of buying. During other times, of course, we've talked about we shorted growth, right? We've sold before big events, big sell events. My biggest thing is protecting downside, right? And so there was times when we started shorting again through tech. We shorted tech through this. This was the big Apple short, the big Tesla short, right? And then we went long on them and traded them up. When we started to get consolidation up here, right? This is, again, a time when I was still wanting to continue to be long, but again, 90% of my portfolio is value, right? And so the 10% I'm playing with is, again, in a situation where I'm like, well, Apple is not going to go further down. There's not a situation where we're going to get to a scenario where Apple ceases to exist, right? And so I can keep going long on that, right? Now, this continued to pull back. Again, inflation ideas, more rotation, whatever you want. Over here, the numbers are done. Okay. Now, I've taken this trade through Apple. Now, again, this is a very small position compared to my value side, but I just want to sort of iterate that this candle right here was when the data came out, right? It's really not that hard to believe that this is the low here. And so how I can confidently buy here, right? It's not so much a bias, right? I bought 2 days in a row, right? I bought 2 days in a row when it was going down, right? If you go into it knowing you're not going to perfectly time things, right? Then even a day like yesterday, I held through and I was fine on that trade, right? Now, of course, we can say, well, now that it's up 2% today, it's fine. But again, this is not so much that you're like stubbornly doing something, right? You're not stubbornly doing something. When have we ever been able to buy something on a pullback, and it's not, in the midst of some volatility and something scary, right? Like, when is someone ever just handing you something, right? You always have to buy when there's some sort of volatile debate going on, or whether something's good or bad. We all agree that inflation's actually not good for growth, but I can still go take a trade like this here, again, on across the mega caps, and realize that I'm not just being stupidly stubborn or biased or something, right? Because my whole opinion is actually that banks and energy are the ones that are going to continue to do well, which is why I keep stubbornly buying this, right? This is where I can be stubborn, and every time there's a pullback, I buy it, and I've had a lot of success doing so, right? And again, you can say that, well, I bought, like, some of you, this is where it comes down to when did you buy? And I talk so much about taking advantage of a moment, right? And to trade through there. And so many excuses come that, well, I just bought this day and, I've watched it go down the last couple of days. That sucks. It's like, where have you been for like a whole year? Like, were you just not around? Like, C Trader made the joke, like, just woke up, anything good to buy? Like that joke that we've came up with, right? Like C Trader used as a joke. But what I'm saying is that there's like actually people out there that think that, or like media is thinking that, like, this is somehow like, oh, well, you know what? It's 2% off the high, and fuck me, like, I bought up at the 2% high, so that must mean this is bad, right? It's always just in context, right? If you bought back anywhere in here, then this is, you're going to hold through that probably, right? Yeah, probably. Is anyone actually selling anything? Right? Like, even if you look at the tech, I want to show this again. I want you just to look at this. Wow. The landscape has really changed here. Even though we know this is just not as bullish as value, right? Are we in a situation where we can go, wow, this is, things have really changed. Tech, tech is just not looking very good. It doesn't look the same as it did a year ago, that's for sure. Yeah, it doesn't look the same because it's up like fucking 50% still. Even though it's the most sort of bearish of the group, it's still, even this, you still can't even short it, and it's still not even, again, in a situation where it's so much bearish or something. So I want to make sure that we're not going on this very, again, I've talked about, put your horizon out to a yearly thought. If you start to think in terms of years instead of like the next 10 minutes or something, you'll have a completely different opinion. Now, again, it is contextual. A lot of trading we've done has been very volatile and short-term in nature. We've been doing a lot of swing trades over quite a bit of time. We talk about these sort of swing trades where it comes into support. We take this trade, make 100% on it. That's very short-term. And yes, we're taking advantage of these dips and then taking profit on it to transition, whatever we're doing. It's really important to remember that even though we trade technically like that, our ideas are still very macro and long term. You actually can't have one without the other. And it's really easy for me to sit here and be like, oh, I caught the support, and it was because of that, like that, somehow it was just this technical part here. No, if you start to just put this in a weekly perspective again, there's basically no movement. We're just taking advantage of very small, sort of finite situations, right? We're taking advantage of very small moves to basically capture alpha in the short term because it's the only place that we can. Because if you go long term here, you're just in the same boat. We're just holding long term. There's nothing wrong. You should do that. You're trading because the only reason you're able to make those trades where prices pull back and then you buy on those pullbacks is because this is true. This trend is true. If that wasn't the case, then you can't do so, which is again when things are in consolidations. Markets are sort of trading flat, sideways. We don't have bullish reasoning. We don't have spending. We have weakness in the economy and there's uncertainty. We don't have those things. The trend is intact. There's volatility in this week. And if there's volatility, then this is where I want to be able to go, okay, this is my one opportunity that I'm going to actually get exposure to new long trades that, again, you're paying a higher price on the trend this whole time. You're actually going to be able to get a little bit of a better price here, right? Otherwise, again, it's not changing, right? We're not changing so much as adapting to situations, and when new money comes in, we're trying to spend it in the best way possible, which is, yeah, right now you don't want to go throw it all into the Nasdaq. You want to go throw it into banks and energy because it makes the most sense. It's going to most directly it's going to make the most upfront. And so it makes the most sense. But again, people are not going, you know what? I'm gonna just sell everything and then go put it into something else. That the market doesn't work like that. You and I may work like that, right? I can go, you know what? I'm gonna sell all my Bitcoin and go put it into somewhere that's just gonna keep trending up. Which again, I talked about this derivative sort of mindset. If you look at just again, I expect this to pick up a little bit more, and I think the bond market's proving that fact to be correct. And this is again where when inflation goes up, you don't really want to be in treasuries because they're fixed. You get a fixed rate, right? Yeah, yields are going up right now. Yields are going up because everyone's selling them. But even with higher yields here, the problem is that if inflation goes up, then those yields are going to be negative eventually. So if you want consistent returns, dividends is what you can do in the equity market. Now you have to buy a lot of shares to get dividends to actually pay you. And the problem is that you don't want to buy something like AT&T that trades flat for fucking 30 years, right? Now, I've shown why I think that those will continue to increase, but it's because there's an inflow. So everyone's flowing from the treasury market to the equity market on the dividend side, and you can go buy something like this here that you're going to actually get. This is the high dividend side. This is still more risky. Not really that risky, but you know what I mean. Here's your dividend. You're getting a 4.63% dividend here. While this still trends to the upside. This is the important part, is that this is going to pay you a consistent return. What's more sort of on the risk side of equities is that this actually keeps trending at the same rate as the rest of the equity market. And so you're getting dividends and you're getting the sort of the exposure to the underlying increase, right? And so it's something like this here that we've seen portfolios change. It's so hard to always put into perspective, but this is, again, it is a global marketplace, and we have a rotation from bonds. We have a rotation from debt to equities. That's a very big difference compared to having them both be correlated, in that you're trying to buy equities and hedge it with bonds. Right now, that's not what we're doing, and that's why things look a little different. Things do look different, right? Things sell more than I expect, right? Like when I look at the Dow and what I'm talking about, it certainly sold more than I expect, but that's because we've never been in a situation where everyone's putting all their sort of eggs in the equity basket, but hedging it with the equities themselves, right? Everyone is selling bonds. It's almost always from the start of the equity markets, at least here, it's always been a 60-40 portfolio. 60% stocks, 40% bonds. That 40% is really changing. And so guess what? That means a lot more volatility in the short term on stocks when there is volatile data, right? The numbers have been volatile, so why wouldn't the market be volatile, right? If the numbers were exactly what we expected, do you think that anything would have changed in the equity market? No. It was because they were volatile, right? And so you got to start to put them together and realize that, okay, I'm gonna be, I don't need to remove my bias here or my argument just because there's more volatility, right? It's really easy to, again, to feel like you know exactly what's happening in this time, like to go, okay, nope, my idea is wrong because the market went down the last 2 days. And then again, what are you gonna do? You're gonna discount this entire trend for fucking 2 days, right? And then go, oh well, now today actually, you know what? Well, now things are up today, so actually, again, you can't flip flop on ideas. So that should at least explain a little bit of why I can be so sort of headstrong in terms of I'm gonna buy this. And again, it's confidence, and it's not being stupid though. Stupid people make stupid decisions in the sense that they're just overly confident of a bad idea, right? It's not a bad idea. The contrarian idea is to be a seller here, right? Again, it's hard to find confidence if you haven't found discipline and you don't really have experience and you keep fucking you keep buying at like a high or something. But again, it's because there's a big difference, right? There's a big difference between the two, and those are the people that, again, are not gonna listen. If you keep getting so unlucky that every time you buy, uh, it's at the very high of a trend, then that means you're not following the fucking rules in the first place, right? Like there, you know how impossibly hard it is to buy at the top candle every single time you buy. It's almost it's almost probably a higher chance to win the lottery, right? If you look at the actual amount of green to red on any given chart, especially if we're looking at the value side, the idea that you could somehow buy the top candle and then have to get pushed out of that position is crazy. And the same with over here. This is a lot more volatility, but the idea that you actually blow up your portfolio from this when the market's been going up, and when we started trading the Dow over here, that this somehow blew up your position means that you did something very wrong, right? Now, I've had a discussion with a couple friends that started trading through the value side, as I did. But you know what the difference between them and I is? Themselves and me, and again, they lost some money and they were complaining. The difference is, you know what they were buying for options? They were buying weekly in less than a month options and trying to time every fucking move. And so they were getting in and out of trades every single day. You know what I've done with the Dow trade? You know how many trades I've made through here? Maybe five at most. I had an energy transition. I had a bank transition. I took an energy trade here. I transitioned it over here. I was 2 trades. Okay. And again, there was the first trade through here. Okay, banks. Well, we had the first trade, a transition trade when we talked about this level. If you guys remember over here, we had bank earnings coming through, and that was the next trade. And I have the same position, and I've actually bought more over here. You know what's really stupid? Is to buy something for value because of it's a long-term idea because of inflation, and then to make 100 different trades every single week through here. It doesn't make any sense, and I've said this since we've even started this Discord here, is that you should not be scalping all the way up. You should not be trading all the way through. You buy something, transitions are important, but if you have to transition every single day, that means what you're buying sucks, right? You're buying something that's junk. That means you've got a problem. It means you're trying to do too much and you don't know how to do it, right? No one should be in a situation. I'm telling you right now, no one should be in a situation where if you've been trading consistently, that this is somehow a negative thing here. This should definitely be opportunity. Now, you have plenty of time, right? You have plenty of time here still, but I'll make sure that there's the understanding that this is an opportunity, and what exactly this is again, it's not this like it always feels the same, right? But the difference is here, I think everyone feels that no one's going, oh, this is the top or like a bubble or something. You got to understand that that's not even a part of any discussion right now, right? And so that's where you have to continue to be confident, continue to buy, and then if you don't do so, that's okay, but you can't then wait to go buy like 2 weeks later at a high again and then keep beating yourself up, right? And this is usually a discussion of stop buying shit contracts, right? If you just buy, this is where I would advise any of you that maybe I'll find out which VOD it was. When I talked about this idea of trading through, of how you see portfolios switching over to trading through value, but specifically through derivatives and trying to basically, they want to have bonds, but they want to have basically better returns through the equity market. And if you look at if you look at this here, this is where I have a lot of money on this chart here, but it's really nice because what I can do is instead of having I talk about this, instead of just having cash, which again, if you have cash right now, you're just actively losing money. It's okay if you need to be patient and on the sidelines, but this is a great spot. This is a great place to park your money right now, is that you can go throw your money here, and even through this, right, this pullback here, this is the exact same percentage that the actual S&P lost. Am I really worried for my entry over here about this here? No, this is very long term, and I can sit in this for fucking years if I needed to, right? That's not going to be what's going to happen, but at the end of the day, I can't. There's only so much money I can trade. I spent fucking all morning and all day today trading. There's no way I could do it with 50% more, right? There's just no way. And so again, if you have extra money, go put it in somewhere that you can again, that's being adaptable to the situation, which I would say right now is the dirty Dow. The Dow Jones Industrial Average is a great average right now in terms of an index. And then if you go look at one of these dividend funds connected to the S&P, that's a great way to go put money on, especially if you're having a tough time. You don't need to time this. You buy this and then it goes down. If you bought over here and went down 4%, well, fuck me. You really got unlucky. It still doesn't matter. You're going to just hold this for a very long time. And again, I want to point out some things from what I said yesterday on the Dow. Again, just to like piss some people off. I talked about how yesterday, I think Mobsky had brought it up, the XD chart, how we finally looked at the XD chart and how silly it looked. I talked about yesterday that those of you that did not get a part of some of these Dow tickers, that again, we started trading literally back over this area. This was a great opportunity because this is the most volatility you're going to see on this chart ever. That's it. You won't see this volatility again. This is the great time to get exposure to your long-term trade. The great time to buy this because the price you're paying here is very similar to in here. It's very similar because this volatility is going to go away. I want to make this comment because for those of you trading options as well, when there's significant volatility here, if you buy a short-term call, that's not a good decision. It can be, but the problem is here, if you compare long-term to short-term options, when there's a lot of volatility on a chart that's not volatile, right? So this chart is not volatile. Value is not volatile at all. There's been a one-way street. This volatility here allows you to get exposure to the long term because when you buy short-term, you need your volatility to increase. When you buy short-term calls, you need volatility to increase. That IV is your premium level. Your premium is set by the implied volatility. So if you go over here and buy May monthlies or something, let's say something ridiculous, if the volatility doesn't go up, you're going to have a very hard time making anything. And actually, you're going to really get hurt if it doesn't move at all. Yes, the underlying can go up and give you a gain, but it's not going to actually even be close to the longer term contracts. If you compared May monthlies here to, let's say, out in July or something, the Julys would actually pay more for this underlying move comparatively because, again, the IVs and the premium levels. Something that has low volatility that then experiences high volatility is a must long-term buy in terms of expiration. It's when it's the opposite that you can then go, okay, this very low volatile situation, I bet there's going to be volatility coming up. That's when you go buy shorter term calls. This is where something I want to compare this to when we bought this NASDAQ move. This tightening that happened over here, this March 25th move, where I was trying to buy multiple days in a row, got stopped out a couple times. This is low volatility, very low volatility. And you know what we did? We bet that there's going to be higher volatility. Do you see the difference between the two, right? This tightening here leads to less volatility. We bet on higher volatility. You don't want to do the exact opposite in a situation where it's low volatility into high volatility, and then by short term, you're actually going to get hurt through there, right? Now, this could be a reason why some people mess up a lot, is up misunderstanding the way the volatility works. We want to buy when the VIX is high, yes, but you don't want to buy lottery tickets when the volatility is high, right? You're just actually increasing the odds that you lose. So you want to buy something that's a little bit long term so that when it comes out of there, that's when you're going to have the best chances to actually profit. If it comes out of here, then that's your best chance. If it's, again, the short term, you're playing a different game, and it's very much against you, very much against you. So just to put that into perspective, but again, yesterday was the best day to buy was yesterday. Best day to buy was yesterday. We said the same thing the day before, and guess what? It wasn't. But guess what? Yesterday was. Now, I want to put into perspective tomorrow. All right, so we've got 1 day left this week. Okay, we recovered, I would say, more than the historical average. Okay, so if we look at just let's just say S&P overall, usually you return about halfway through the candle. We basically 2-bar reversaled the entire thing. We actually did a lot more points, and so it's a little bit more bid than, let's say, historical average. This, I would say, should lead to a very bid Friday, a green Friday, if everyone has sort of the same opinion that I do, that actually inflation is going to be good for the market, and that this was, again, some selling of volatility, and there was hedging, and hedging taking profit. The data was volatile, meaning that the markets are going to be volatile. We're past that. We had a very green day today. I think you can look at this downtrend. It leads to an uptrend, the start of a new uptrend. There's a lot of ways that you can see that the probability that tomorrow is green is probably like 75% or something. I don't think that's really that far-fetched of opinion. Certainly still leading towards the value side, but even when we look at some of these other tickers at a low point, it's really not that hard to see. So that would mean if we don't have a very, let's say we don't have a very good day tomorrow, and we actually have a negative day, we need to again look to make sure that it's our side. If it's pre-market, we're going to discount anything pre-market. It's very much based on the movement, because again, we're getting out of a volatile situation, which means we need to watch for flows. We're not looking for prices. We're looking for movement. So we're going to first do that. If there's movement to the downside, this is where we're going to ask ourselves, are we being too biased? Again, I had the discussion to start the call that most of this is not being stubborn or anything like that. But we need to still have the discussion. If selling continues through the day, are we going to continue to hold? Are we going to continue to buy on anything that we just bought, right? And this would, again, be more to the growth side. We'll see if that's going to be the case. Again, probability is probably like 75% you're going to be green on the day again tomorrow. Just, again, we've lost quite a bit of points. We're going to recover them. This is where it doesn't really matter what the day-to-day is, right? It doesn't really matter, but we are trying to be a little bit more understanding of sort of the event here and how we're trading out, like through it. And so, again, I want you to put it into a perspective of a weekly perspective, thinking about more than just the day, and to make sure that every individual day doesn't change your opinion. And I think that's more important. And it's okay to actually be, let's say some of you maybe had an opinion through the last couple of days that maybe we were being too stubborn to be bullish and buying. It's important that you don't just use 1 day of price action that changes that entire opinion, right? And so, again, it's important to keep up, not a charade or something, but keep up the confidence in what we have here, because, again, 1 day doesn't change that. 1 week doesn't change that, when, again, we have a pretty good, clear picture. And again, this is where, if you haven't been making money, then that's one thing, but it's important to see that the market's actually been trending up the whole time, and it was possible to make money through the whole upside trade, right? And so that's where, again, you don't let this discount all this. And even through here, I just want to point out, even last week, we actually did very well through this, through, again, buying through here, right? Now, we didn't clear that much on a weekly perspective. We didn't gain that much from the start of 1 week to the next, but we actually made quite a bit through that move. So again, always look towards the trades that were in front of us and that we could make and that we did make, and not let one red day, one red week to change your entire strategy. Because again, we're doing very well here, and I think a lot of you again are doing very well. 1 week of losses or something like that should not make you go back to the drawing board. And so that's why, again, I want to make sure that or at least that stays clear with everyone, because it's very easy to lose sort of your way when you're losing in a situation that you're unsure of, right? There's a lot of uncertainty. Who knows what the fucking numbers mean? Like, there's not, again, it's not like we have a crystal ball that tells us that it's going to be good or bad for inflation. This is where you don't really, you don't have the luxury of changing your mind now, because as soon as you do, again, the market's going to go past you. And again, which trade is most likely to come out of everybody? Maybe forget our own opinions. What's the market going to do, right? Is the market going to go short here? They haven't done it so far, right? So I'm very excited to see what we get tomorrow. I spent just about all my money over the last couple days, so I'm fully positioned, ready to get going. I do have some of those dividend funds, cash that I can spend, so very easy to just take profit on those as I'm ready to maybe take a more risk. But either way, I mean, we're ready to see if this move comes out of here or not. We can certainly consolidate some of the move here. Again, I think growth is going to consolidate, but let's see what we get. Let's not draw too many conclusions just yet from today either, right? So again, we're looking for the whole composition of the whole week. So let's see what we get. Excited. Hopefully you guys didn't take too many risks on the on anything, right? On the growth side, I'm saying I did take some that I just couldn't help myself. I took TSM here at close. Those are the few who were in here. As I said, I wasn't going to take anything other than mega caps, but I couldn't help myself, so I still bought things like TSM on the semiconductor side. So again, I still think that it's gambling over there, but I'm okay with doing a little bit of that. So maybe we'll have more of that tomorrow. I'm going to try very hard not to bring Friday into like some sort of meme territory of buying a bunch of dumb shit that has nothing to do, because every time I'm 100% in the market, I find new ways to put on new risk, because I'm like, well, I have no risk on right now. So I think we know where we should be positioned. Banks and energy are pretty fucking boring. Infrastructure is pretty boring, but what are you going to do? Making money is making money. So again, we're looking in a longer term perspective here. There'll be 100% sort of trades tomorrow, I'm sure, but the chances of spotting them are going to be pretty fucking low. So let's not spend all day trying to look for those. Let's stay consistent, right? I'll see you guys tomorrow in the morning. I'll be here. Again, I got all the trading out of the way, so I can be here tomorrow. And enjoy your night, your evening, wherever you are. Until then.